Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today here in Europe. I'm Caroline Hepker with Stephen Cowell, and we're joined by Bloomberg reporter Chloe Millay. Good morning.
Good morning.
Rightmove saying that the industry will survive AI. They said that in the earnings this morning. That's obviously quite a big claim. There's a lot of concern that these sorts of property portals, property websites are going to be hit hard by artificial intelligence.
Yeah, but it seems the CEO, so I spoke to the CEO this morning, and he was actually, quite optimistic about this. So he was saying that because those property portals have proprietary data, then that would mean that they would be able to develop their own AI tools internally and then be able to use that, and therefore that all of those efficiency gains and, gaining more customers through those AI tools, that would then, be a benefit to them. And, this is something that's also, that we've seen as well with Scout24, which is this other property portal out of Germany, where they expect really strong growth this year. And analysts have said that, this is a company that could be an AI leader, an AI survivor in a way because of that proprietary data. An interesting thing that the Rightmove CEO said this morning was actually that, because buying a home is so personal, is so complex, that people would not necessarily be immediately wanting to outsource that to an AI agent. And, it's not like maybe booking a holiday or anything like that. It's something that's more complex, and therefore there will still be that need for property portals. So that's why he thinks that AI is an opportunity. It's both because of that data, which means that they will be able to create their own tools, and then also because it's such a complex personal process that it still needs to have that human element in a way. They were quite optimistic. The results were also pretty good, with expectations of strong growth going this year, which means that maybe the housing market as well is recovering a little bit.
Okay, yeah, that's really interesting from Rightmove this morning. Let's go to the food delivery company Delivery Hero next. Missing estimates in their results.
Yeah, orders missed expectations. The problem for Delivery Hero is that it's dealing with a lot of competition in some of the key markets and the key regions. And one of them in particular is the Middle East. So the biggest rival in the Middle East for Delivery Hero is the Chinese company Metro. And they have been offering really aggressive discounts. And so that's really hurting Delivery Hero shares. And so that means for that company that the calls from investors to sell some or the whole of the business, that's only going to get louder, really. So Delivery Hero has recently said that it's evaluating different options to improve performance. That includes changes to its capital structure. And that was after some major shareholders pushed it to conduct a strategic review. And it's also considering some partnerships, assessing which owners would be best for some assets and some operations. So it's thinking about all of this. But right now, those calls for sale or for divestments have not been answered yet. So they might need to be soon if it wants those shares to recover.
Okay, another company out of Germany that we want to talk about too, BASF, and this is a warning about big job cuts.
Yeah. So more job cuts for BASF, part of this cost-saving push that the company has been on for a little bit now. So really is a sign that the downturn in that chemicals market is still very much happening. So the problem here is one of overcapacity, which of course that means lower prices, and then of course that impacts profitability for all of those big chemicals companies, including BASF. So analysts said that the outlook was clearly below what was expected by analysts, and so it's based on quite a rather bleak assumption about industrial production, which is expected to be down significantly this year. So BASF said that 2026 would be another transition year, that the market could potentially recover in late 2026, but there's no guarantee essentially. So it's been cutting jobs, it's been carving out some units, really trying to streamline the company and focus only on the more profitable aspects of it. But, it seems like there's probably more that needs to be done. And what's happening is probably best exemplified by what a Bernstein analyst said, which is that BASF is currently running very hard to stand still. So that's what's happening for that company.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.